And this week, it's been in the press, it's been in the AFR, we saw shares in Norway-based battery metals explorer Kuniko Limited rocket as much as 370% to $3.60, which was a 13-fold increase on their IPO price of 20 cents. Now, that's just 2 days after it listed. Now, why, you ask? Why would an explorer with no news increase 13-fold? Well, the Explorer is a spin-off of the European lithium company Vulcan Energy. Now, Vulcan Energy, we all know, that's a company whose share price has risen over 2,000% in the last 12 months. But behind the scenes, there could be something a little bit more sinister at play here. There's been a coordinated promotion by Stocks Digital, who were given $375,000 worth of stock at the IPO price of 20 cents to promote Kuniko. Now, Stocks Digital run 3 websites. They run Catalyst Hunter, Wise Owl, Next Investors, and they write what appears to be research-style reports. It's research by nature and the way it looks, but there's no analyst's name on this research report. In fact, none of their articles or research have any names on it at all. And unlike any small cap fund manager and the websites they see, if you go onto these websites, there actually isn't a bio or resume or insight. So how does this all work? Well, they produce this research style report and they pay to blast it out across distribution channels across the market. And they go out on social media to the retail investor groups that are on Facebook, Twitter, and Reddit. I've got no doubt that they're paying the owners of these investor groups to promote their research. And this coordinated promotion has created an army of followers who want to get in fast and get out first. Yesterday, that stock traded anywhere between 80 cents and $3.60 in a day. So there's a wall of liquidity all flowing in one direction. Now, for full transparency, they've approached Share Cafe and have used us in the past. But once we understood exactly what was going on, and particularly the style of their reports, we switched them off. Previously, we saw the promotion of OneView Healthcare. Now, in that promotion, they were talking about how the star stock picker, Will Vickers from the $10 billion fund manager Caledonia, they were talking about how he was a shareholder. What they didn't say was that Will had bought the stock dollars higher and hadn't entered the stock at the Stocks Digital price of 20 cents. So the stock had gone from $2 to 20 cents. So promoting success through association isn't research. We actually have written an article on Stocks Digital in the past and we interviewed their founder. Now, he said, we're no different from a VC fund that lists its investments and see ourselves as more as a fund manager than a media company these days. Well, I don't know a fund manager in the country that is given an equity position and paid to promote that position. Now, research, you have to remember, is meant to be balanced. It's meant to highlight the risks as well as the potential upside. We understand research. We've got our own research business in Corporate Connect. But our analysts put their name on their reports. They build a career inside investment banks, putting their reputations on their line. Sure, the companies commission us to write that research, but our analysts make their own decisions as to whether they want to actually research that company. After all, it is their reputation on the line and it is their name associated with the report. And in response, our research receives hundreds of global institutional downloads. Now, we don't get the sort of Kuniko instant success with our research, and I reckon companies don't want to be associated with this sort of volatility and have their names in the headlights, as we've seen over the last couple of days. There's a reputational risk associated with the Stocks Digital approach, and perhaps it says something about the companies as much as it does about them. And in the end, I think Stocks Digital are about to become a victim of their own success.